Okay. So we are going to continue with our question 5 of the 2018 Fundamentals of Accounting big question paper. Question 5.2, which is drawing up the statement of financial position as at 31 December 2017. So 5.2, just like any other statement or book that you record in accounting, the first thing that you need to do is you need to you need to write the heading of the book or of the statement. So that is the first thing that you always need to do. Guys, please just mute yourselves because there's noise on the background and I'm recording. Just mute yourselves, please. Okay, thank you. Okay, so the heading of a balance sheet or the heading of the statement of financial position. So in this case, it will be statement of financial position of the name of the business, and this is the School of Accounting of the School of Accounting as at, ne? So when it comes to a balance sheet, a statement of financial position is totally different. The heading is totally different from the heading of the what of the income statement. So when with the income statement you write for the year ended, it's for the year ended. But when it comes to statement of financial position, it's as at, ne? So it's as at 31 December 31 December. In this case, it was 2017. Okay, now after you're done, that is the first thing that you always need to do. You should make sure that your book or your statement has got a heading. So after that, we draw up our table. Oh, what is happening now? Okay. So we quickly draw up our table. Okay. And remember this question, you were given a bank account. The first table that you see there is your bank account, and then you're also given some additional information. That small paragraph that starts with all business takings were paid into the bank, with an exemption of 9,630, meaning the 9,630 was the cash. Now out of that cash, you paid wages of 5,472, drawings of 1,164, and also purchase of goods 2,994. Ne? And then from there, you're also again given a table of additional information that consists of balances, your opening balances and your closing balances. We said that balances of the previous year becomes the opening balances of the current year. So the balances that you see there of 2016 are our opening balances of 2017. Okay, now with the statement of financial position is as at December 2017, meaning you are using your 2017 information, 2017 balances. Do you understand? Okay, so what is the first thing that you record? It's your assets. So assets are the first thing, and then your non-current assets. Okay, now with the non-current assets, we only have one current asset there, which is fixtures at valuation. We have fixtures at valuation. Now these fixtures, the total the amount, the closing amount, that is the amount after depreciation, ne? Now looking at your opening balance was 2,500, ne? Of your fixtures was 2,500, and then your closing balance was 2,250. So the difference is the depreciation, ne? So in this case, because depreciation is already calculated, or you already given the final amount, you didn't have to we didn't have to calculate it ourselves, so you just write the amount as it is already. So 2,250. Okay, now that you're done, you check, do you have any other non-current assets? No, this was the only non-current asset that we have, and therefore we record it under non-current assets. You record it next to non-current assets 2,250 because that's the final amount, and then from there you move on to your current assets. So we move on to our current assets. We have a lot of current assets there. So what current assets can you see from that? So looking at our balances of 2017, obviously the first current asset that we have there is inventory. That is the first, and our inventory is 15,144. So 1,544, and then we move on to our creditors. These are liabilities. We move on to our debtors, and our debtors are 8,624. So we have debtors of 8,624. Okay, and then from there, what other current assets do we have there? So when it comes to prepayments and accruals, I want you to take note of this. Prepayments and accruals is that prepaid expenses, or prepaid expenses and accrued income. Prepaid expenses and accrued income are current assets, while prepaid income or income received in advance and accrued expenses are current liabilities. So what you need to do is you need to look at your prepayments and your accruals and find out whether they are falling under current liabilities or under current assets. Now looking at that, we have rates prepaid expenses. So rates prepaid was 225. We said we are using our closing balances. In this case, rates prepaid was 225, and we say that prepaid expenses are current assets. So we have rates prepaid. So rates prepaid of 225. And then we move on. So what other information do we have there? Okay, we have rent owing. So rent owing, that is an accrued expenses. That is an accrued expenses, so we'll leave it behind since that is an accrued expenses. And we said that accrued expenses are liabilities. We owe people. We're actually supposed to pay for our rent, but we did not. So we owe the landlord, and everyone that we owe is our liability. Okay, so what other current asset do we have there? What other current asset do we have there? Now looking at the bank, ne? Remember you have your bank that you are given there. You have a bank. So obviously then you will know that your closing balance of bank, your closing balance of bank is also part of your should also be part of your statement of financial position. Now looking at this bank account, the balance carried down is on the debit side. Or looking at this bank account, you can just tell that okay, the credit side is the biggest amount. And obviously what does that tell you? It tells you that you paid more than you actually supposed you actually paid more than you actually have in your bank account. That's why your credit side, your payment side is more than your receiving side. And in other words, if your balance carried down is on the debit side, then you know that your balance, when you bring down your balance will be on the credit side. And when your bank balance is on the credit side, what do you call it? It's referred to as our current liability, as a bank overdraft. Meaning that if our closing balance is on the debit side, credit um, carried down, bank carried down balance is on the debit side. When we have, remember, for every balance carried down, there should be a balance brought down. Now when we bring down our balance, obviously it will go on the opposite side, which is the credit side. And a balance brought down that is on the credit side becomes our bank overdraft. It becomes our liability. So in this case, the bank is part of the liabilities. So we check again. So what other current assets do we have here? Now looking at this, let's see our cash. Next. So let's see our cash. Quickly please, because I don't have a calculator with me here. So if there's anyone with a calculator, please calculate for us our cash, saying that we had actually 9,630 as cash. Okay? And then out of this, we paid wages for 5,472. We also paid for drawings, and we also purchased goods. So please take 9,630 minus 5,472 minus 1,164, and then you also minus 2,994. How much will you get? Quickly please. Just unmute yourself and tell me the answer, because I don't have a calculator with me here. How much are we getting? Anyone?
9,630 minus what? Sorry.
9,630 minus 5,000. You have to minus your wages, then you also minus your drawings and also the purchase. The short paragraph that you have there between the two tables.
Oh, okay.
Yeah. How much are you getting? Anyone? Anyone to help out? Mary?
So 9,000 minus 500 and 570, 472, then 1,164, then minus 2,994.
Will you get 0?
Zero. Yes, 0.
Okay, so meaning that you had a total cash of 9,630, and out of the cash that you had, you paid for wages, drawings, and purchase of goods. Ne? So you used the
Then
whole
get it.
cash amount that you had. You actually used the whole cash amount that you had, and therefore you have no cash anymore. That's why you have no cash anymore, and so because your cash is 0, you don't even need to include it under your current assets. So let's add up our current assets because those are the only current assets that we have. Let's add them up. So you have 15,144 plus 8,624, and then you plus 255, right? Uh,
23,000. 993. 23,993.
So in this case, we have 23,993. Okay. So from there, you get your total. So how much are our total assets? So 23,993 plus 2,250, and then we get our total assets.
$26,243.
So we have 26,243. Okay. And then from there, we move on to our equity and plus liabilities. So equity plus liability. We start off with our equity first. Under equity, we only have three accounts, which is the capital,
Net profit.
net profit, but in this case, we made a net loss. It was a net loss that we made.
Oh.
Yeah. So it's less net loss. So obviously you will need to less it because it's a net loss. And then you also less drawings. Now in this case, you were not given any capital amount, and because you are not given any capital amount does not mean that you do not have capital. You will not use it. Now this is where the statement of affairs comes in. You will need to calculate your opening capital. You use your opening capital, therefore you will need to draw up a statement of affairs using your 2016 balances. In other words, using your opening balances. Do you understand? So let's quickly draw up our statement of affairs. And statement of affairs is one of the steps that you need to complete in order for you to draw up financial statements of incomplete records. If you remember, if you went through the slides. So statement of affairs is at December 31, 2016, because you are using 2016 balances. Okay, so we draw a table This is how we draw up a statement of affairs. We draw a table. So we actually just have 6 minutes left. So if the class ends itself, then I'll quickly just restart it. So we finish with this question. Then I'll give you guys another question paper that we'll start with. Okay, so statement of affairs, you first start with your assets. Statement of affairs is actually just assets minus liabilities equals to capital. Ne? So assets minus liabilities will give you your capital. But in cases where let me say in 2016 you had drawings, ne? So in 2016 you had drawings amount, then you also need to subtract your drawings. And then you get your capital. So we are starting off with our assets first. What assets did we have in 2016? Remember, we are only using information of 2016. So we have we start off with our fixtures first, because those are fixtures and fittings. Fixtures, and our fixtures were 2,500. So we move on to our current assets, and our current assets, the first one was bank. The opening balance of bank. If you check in your bank account, we have an opening balance of 405. Ne? The opening balance. Remember, we are using our opening balances, so you should always make sure, don't just look at the 2016 information. If you are given a bank account, then you should also look for the opening balance of that bank account, meaning you should use all opening balances. Now in this case, the opening balance was 405. Okay, and then we move on. We also have inventory, and our opening inventory was 13,862. And then from there we had debtors, and then our debtors were 9,031. And then from there, what else do we had? Now this rates prepaid, ne? This rates prepaid, because we are dealing with 2016. It's no more an asset. In 2016, it's not an asset. In 2016 is a current liability. We have in 2016, it's prepaid. Oh, sorry. Rates prepaid. Let me not confuse you. So sorry. Rates prepaid. It's a current asset, and it's 210. Okay, and then what other asset do we have there? So what other assets do we have there? I think those were the only assets that we have, and therefore we'll need to add them together. Then you get total assets, and then after total assets, we less liabilities. And in liabilities, with liabilities, after listing down our liabilities, we only have two liabilities, which is creditors. And creditors were 5,624. And then the last one, which is rent owing of 150. Rent owing of 150. Okay, So what is our total asset? So what is our total asset? Plus 9,031 plus 210. So we get 26. So our total assets were 26,008. I believe we got the same amount. And then we subtract our
Yes.
liability. Did you get the same amount?
Yes.
Okay, 5624 plus 150. So our total liabilities were 5,000. 5774. Okay, so therefore our capital amount is how much? The capital amount that you are looking for is 26,008 minus 5774. So it's 20,234. So that was the capital amount that you're looking for. Then we continue to the next session because this session will end itself within seconds.